Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind with any of your trading that there's no guarantee for profits with any one trade. There's risk with each and every trade that you take. But the flip side of that is obviously there's good potential for profit with each and every trade that you take as well, which is why we're all here. The idea though, as you're going after those profits, is to make sure that you manage your risk in a way that makes sense, whether you're using stop loss marks, hedge positions, or maybe a unique feature like AvaProtect, which we offer on our web trader platform and our AvaTrade Go mobile app, which is an award-winning mobile app, by the way. You'll see a lot of nice risk management tools as far as that goes on our web trader and AvaTrade Go app. Not just AvaProtect, but also the order window calculates your exposure to your stop loss for you, converts it to your account currency, calculates your potential profit, etc., before you ever buy or sell, which is really important to understand those aspects of your exposure, your risk, your potential profit before you actually open your trades. And so the AvaTrade Go app and the web trader help make that aspect of risk management easier for you. As we move forward with the webinar, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, what is technical analysis? I know we get a mix of new traders and also experienced traders. So for a moment, we'll just talk about the basics of technical analysis, and I mean for a very short moment before we get on to the live charts. So what is technical analysis? It's basically looking at the historical movements on the charts, usually candlestick charts, to look for repetitive patterns that may be predictive of future movements. So as we look at the historical movements, we're looking at price levels that we might think form important levels of support or resistance. We might be looking for ranging patterns or breakthrough movements, etc. And so as we do this type of technical analysis, it hopefully improves upon, no guarantee that it will, but hopefully improves upon your prediction of future movements. And so that's the whole idea of technical analysis, and we'll get into that mostly with manual methods of drawing our own lines and price levels. The other way is also to use indicators that assist you with that technical analysis. As we go along, if you have any questions or if you want to give any input, please do so. And I think we'll start out looking at some headlines. I browsed the internet real quick, and we'll look at some headlines so we can get a feel for which way is the wind blowing today before we jump into the technical analysis on the live charts. So here's a headline from Reuters: U.S. retail sales take a step back. Well, that doesn't sound good. Okay, so that sounds negative. Retail sales went down. Instead of being where it was expected, it was less than expected with the announcements that came out today. And they're saying the spending is pivoting more to the services sector. Okay, so people are spending money more on services, maybe things that they need, and less on retail sales, maybe pulling back on things that they don't have to spend money on. And so, but they're saying the trend remains strong. Okay, so little mixed news there. Another headline: transitory or here to stay. They're talking about inflation. Some of the feds in the U.S., the The members of the FOMC committee, the leaders who make monetary policy decisions, have said they expect the inflation that's occurring in the US, which has been greater than expected, to be transitory, meaning it's not going to last. They're trying to brush off the larger than expected inflation as being temporary. And so investors are trying to read the inflation clues, as this headline says, to see if it truly is only transitory or is it maybe here to stay. And so that's an interesting headline that's hitting the market today and actually causing a bit of fear about inflation maybe being higher than it should be. Crude oil higher. Okay, that's a sign of inflation. Gas prices going higher and higher, crude oil prices going higher and higher. Part of that's linked to what they say here, uncertainty over Iranian exports. Okay, so it's throwing a little bit of a monkey wrench in the oil prices. If there's uncertainty over exports out of Iran because of different negotiations that are going on with sanctions, etc., then that could cause oil prices to spike a bit if there are supply concerns. Okay, U.S. home builder confidence falls to 10-month low. That's leaning towards negative again. We had retail sales lower than expected. We have home builder confidence falling to a 10-month low. Maybe because of home prices getting higher than people can afford. We don't know for sure, but home builder confidence is at a 10-month low. Another negative headline to go along with the retail sales. If we look at what's happening in the markets today, the futures were red pretty much all day. The market opened red and it's red now. That's the little snapshot we see here. The only two things that are in the green in this little snapshot here are the fear index is up, volatility is up. That's the S&P 500 VIX, referred to as the volatility or fear index. It's up over 4%. That's pretty significant. So, and that's usually the case. When the stocks are dropping, the volatility fear index is in the green. And also typically the US dollar tends to be more strong compared to weaker, tends to be strengthening a bit more than weakening when there's fear on the markets. And that's what we see here. So this is all confirmatory data that there's some negative sentiment on the market right now. The futures have been red all day. The market opened red. That's what we're looking at here with the futures and the market after it opened. Everything's red. Also confirmatory, fear index is up, dollar index is up slightly. So this tells us that there's negative sentiment that goes along with the headlines that we saw. Retail sales take a step back. Home builder confidence falls to 10-month low, etc. Okay, so we get the idea. Only took us 5-10 minutes to say, okay, negative sentiment today. All right, so if we take a look at announcements that are coming up tomorrow, big ones, we've got industrial production out of China. Okay, we've got CPI data out of Great Britain. Okay, that's consumer pricing index. That's a show of whether there's inflation or not. And we also have the FOMC committee building permits. That's a big deal that the FOMC committee is talking tomorrow. Interest rate decision, FOMC statement, meeting minutes, etc. tomorrow out of the US. Okay, big deal tomorrow. So some of that fear today is about what will the FOMC committee say tomorrow. Okay, so that fear might not end today, might carry right through until the statement tomorrow in the US. So that's something to keep in mind. This red could continue conceivably if that FOMC statement is going to give some inclination about what is the Fed going to do about this higher than expected inflation. Are they going to do anything? They're going to raise interest rates to slow inflation down, or are they going to say that they still believe the inflation is transitory and continue with the ultra low interest rates and the bond buying program, etc. That's what investors are waiting to hear. And if there's any inclination in the FOMC statement and their minutes that they're going to start to cut back the bond buying program, that they might raise interest rates sooner than expected, you could see a sell-off in the market. You could see a rapid strengthening of the USD against other currencies. And you could actually see a drop in gold if there's the idea that they may cut back on some of this stimulus that's been going on. But we don't know. We don't know what they might say tomorrow, and that's the fear right now that's hitting the market, the uncertainty. Okay, so if you do log in from our main website here, you'll be in our web trader. You also can download AvaTrade Go from here, trading platforms, AvaTrade Go. Remember, I said it has AvaProtect, which you see here in the order window, and other nice features that help to manage risk within the order window. And so if I log in here, I'm in the web trader that has those same features. I would say, please check out those features, AvaProtect, all of the extra features in the order window for managing risk. And there are other nice features on the web trader platform that you find here, like Trading Central. Okay, you've got free signals, by the way, with the technical analysis done for you. Okay, you see the support lines, resistance lines, the expected breakout move. You've got the free signals here. They come in all day long, time-stamped, ready to go. You take a look, see if you like it. We see cryptocurrency signals. You can switch and go to different categories, popular Forex signals, etc. Okay, so a lot of times you pay for signals. These are free. Just check it out in the web trader platform. Whether you're trading on the MT4 platform, MT5, or through the web trader or AvaTrade Go app, etc., you can use these signals from the web trader. All right, so let's jump in the MT4 platform and see what's going on with movements. What's the technical analysis with these different instruments? The cryptocurrencies have been amazing to trade on lately in terms of the technical analysis. And you know, when there's fear hitting the markets, not only moves traditional instruments, it also moves the cryptocurrencies. Sure, Emmanuel, we could take a look at where to see the rollovers. Before we jump into the technical analysis, I can show you real quick on our website. If we go to AvaTrade's main website, go to Trading Info and CFD Rollover. Okay, Trading Info, CFD Rollover. Any instrument that's traded on futures contracts are listed here, and you have the current contract being traded. You have the rollover date listed for each of them. Okay, they're right here on our website. And then you see what the next contract is that'll be traded. All right. Okay. So let's take a look. What's happening? Bitcoin has risen. We looked at this last week as well. If we look at the one-day candles, we see Bitcoin is, let me get on the Bitcoin chart. We see the technical analysis is Bitcoin's up over the last week. 1, 2, 3, 4, 5, 6, 7. The last 7 days, Bitcoin's up. If we look at other cryptocurrencies, they tend to follow Bitcoin eventually. Okay, Bitcoin seems to be the leader of the pack. So if we look at the one-day candles here, and we drew this out last week, you see that Ripple did not follow Bitcoin yet up. If we look over the last same number of days, Ripple's down. So you might be inclined to say it's possible that Ripple is due for a climb. And so I'm trying to get the correct line. Here we go. You might think that it could bounce up at this point. And so we looked at this last week, and it just went sideways since then. And so you still could take a shot at this based on the technicals. And the other aspect of this is if there's fears of inflation right now, the USD could weaken. And if that's the case, then Ripple could move up even easier as it's paired against the USD. So the technicals here look nice. If you want to take a shot on a cryptocurrency, Ripple could make sense, technically speaking. Take a trade size that makes sense for your account, obviously. And the technical analysis says support level there, so you put your stop loss maybe below, and your take profit just before the resistance up here on the one-day candles. Okay, and that's based on the technical of Bitcoin that already went up. Ripple did not follow yet. Perhaps it will. And it certainly has the ability to go up above $1, because you see not that long ago where I drew this line, it was up near $1.80, $2, up in this range up here. So Ripple has a huge ability to go up percentage-wise. It was up there not that long ago near $2, and we've got a bit of a support level here and a leading indicator that says maybe Ripple's due to climb. And we could look at Ethereum, and you may see the same thing, Litecoin, etc. Okay, I just wanted to give one example of a cryptocurrency here before we go to some more traditional instruments. So if we look at crude oil, we looked at the fundamental reason why crude oil is spiking. One of the headlines says there's some fear about supply disruption maybe out of Iran. What amount of exports will they be able to give? Also, if we look overall, the global economy is coming out of the whole pandemic, right? And so as economies open up, there's a larger demand for oil. And then the third factor is there's inflation fears on the US dollar. The US dollar in general has been weak, allowing oil to climb. True, the US dollar is not weakening today so much. So crude oil is in and of itself strengthening on its own fundamentals, even without the US dollar doing much of any weakening. So if we then go to, let's say, 1 hour candles, we see it's an uptrend. If we go to 1 week candles, we're trying to find on the larger candles. Let me get rid of this line. I accidentally drew it. We're looking on the larger candles, 1 week, 1 month, to find, well, where's the next resistance level for oil? And I just found it here in the 1 week candles. Okay, the resistance is here. Okay, we see resistance, resistance, and down. And maybe I can cheat that down just a little bit to be closer to this resistance here. And it tested it here and dropped. So resistance down, and that price is around 75 and change. Okay, so this current rise looks like it's got another $3 to go, $3 plus, before it reaches the next resistance level. Okay, so if I'm looking at this, I'm not thinking just because oil spiked that it's time to sell. The fundamentals are there, the technicals are there for oil to have the potential to rise up into 75 plus range. So what kind of pending order could you put up around 75 that if it does get to this resistance level that you could sell? We understand why it's rising. This is a technical analysis webinar. We don't want to trade against the fundamentals and the technical uptrend right now to short oil, but maybe you feel like it's a little late to go long on oil. You could buy on oil. It's an uptrend. But if you'd rather sell from the resistance, what kind of pending order sells from this resistance level? Emmanuel, yeah, the rollovers tend to occur through the weekend each time, okay? What kind of pending order could we prepare? I'll go to pending orders here to sell from this 1 week candle resistance level up here, which is about 75 and a quarter, let's say. What kind of pending order sells from a higher point? That would be a sell limit. Sell limit sells from a higher point. So we might, using the technical analysis here, say we understand from the fundamentals why it's rising. Overall, there's been a lot of stimulus on the economies. Some of that may slow down eventually, right? That's kind of artificially keeping the economies up. So as crude oil reaches the 1 week candle resistance, it's potential that investors will say that's the time maybe to dump on oil, because eventually some of this stimulus and ultra low interest rates will have to be gradually taken away. Can't go on forever. So 75 a barrel or somewhere near there could be a magic spot that you could say, I'm going to sell. Maybe you put your stop loss $1 up, 76, and your take profit down more like 71. Okay, So we've got 4 times potential profit, $4 to our take profit, risking $1 to our stop loss. Okay, and then the number of barrels you determine yourself. Okay, maybe I really believe in this move, and I'll do 1,000 barrels, which is 1 lot. Right now, that risk, 1,000 barrels, 1 lot, would maybe be okay with the balance you see in my demo account, right? To risk 1,000 when there's 100,000 in the account, it's a 1% risk. Okay, maybe you risk 5%, 10%, or something less. That's up to you on each move, how much you believe in it, how much you want to risk. But the key is make sure you understand how much you're risking. Okay, it says 1 lot is 1,000 barrels. I do 1 lot, that's 1,000 barrels times $1 to my stop loss. That's $1,000 risk. Okay, that's how the math works. And by the way, if you use AvaTrade Go or our web trader, it calculates that for you in the order window. You don't have to do that math. Just put the trade size, tell it, buy from or sell from for the pending order. You don't have to tell it the pending order type either. You just tell it sell from 75 or whatever, and it makes it the right type of pending order, and it'll tell you the risk before you finish completing that pending order within the order window. Okay, so I've got my proposed trade set up. Oops, I need my at price. Somehow I knocked it loose. 75, place. Okay, so now we've got a pending order based on an uptrend and stimulus and inflation fears that could drive commodity prices up against a weakening USD. And if oil reaches a major resistance level, which it easily could under these conditions, that could be a spot where you get a strong pullback. Because prices haven't been at that level, we have to go back on the 1-week candle since 2018, the summer/fall of 2018. That's quite a while ago. So if it reaches a price level that it hasn't reached for that length of time, like 3 years time, that's a major resistance level. You could see a strong pullback at that point. Okay, and it's up to you whether you say, okay, I want my stop loss $1 away to get above that resistance level, and I want my take profit $2 away. I did $1 and $4. It's up to you. The technicals show that it could drop $4 and not have to break a support level on the 1-week candles. So the technical analysis shows $1 to $4 is okay. You could do $1 to $1, $1 to $2, or something different. But as long as you understand why this location just before 75.25, 75.5 is resistance, then that's a spot that could make sense. All right, so that's crude oil. Let's take a look at maybe a major indice, maybe the NASDAQ, the US Tech 100. This is the NASDAQ. So 1-week candles show that there's some resistance up here that got broken, right? There was the resistance on the 1-week candles, 1 week, 2 weeks, 3 weeks, and down. And this week it broke past that to new highs and now is pulled back below that resistance. That's an important event that occurred. It dropped back below this resistance that it broke. So it was resistance, 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 dipped, it went above that resistance and now pulled back below it. So the fear was enough to not only pull back from the all-time highs, but to break back below this old resistance level, which should have acted as support. So this fear right now could be somewhat strong heading into the FOMC statement tomorrow. It could cause a further pullback of the markets, and you don't have to put your stop loss far away to get back above this resistance. Okay, so let's go to 4-hour candles. If you do a market sell on NASDAQ, I'm not saying you should or shouldn't, but based on the fear that's in the market right now, let's say I do, I don't know, 2/10 of a lot. Based on your balance, your risk tolerance, you take the trade size that makes sense. You sell on this. In this example, in this simulation, I put my stop loss above the all-time high. Okay, that's the all-time high. And I'm above that resistance level then that was on the 1 week candles that we already looked at. That's this red line right here. We drew this red line, we drew it off of the 1 week candles we were just looking at. It just broke below that, what should have been support, which should act as resistance now. So we're going in the direction of the fundamental news, the fear that we see on the markets, pulling the NASDAQ down. We've got the technical analysis on our side. It just broke the support level that we drew, which was a very strong resistance level based off of 1 week candles. And now we've got our stop loss above that resistance and above the all-time high. And where do we put a take profit then? If you're scalping, you put it just before the next major support level, which is maybe right there. Okay, this was resistance, resistance, breakthrough, became support, support. So taking profit right before it would have to break that support might make sense. So now I'm risking a little more than what my take profit is. And why is that? Because the technical set up that way. Sometimes you do set up where your take profit's a little further than, your stop loss is a little further than your take profit. Okay, the oil that we set up is a pending order. We're waiting for a perfect entry where we're just below the resistance and we have a lot of room to our take profit. Pending orders a lot of times allow you to have a more perfect entry where your stop loss can be less distance than your take profit. This is a market move because it already moved. It's already going. It's already broken the support. We're not waiting for it to pull back now because we feel like the momentum is there based on the fundamental news and the technical breaking of this support level. Okay, which was on, again, a major level, price level based on the 1 week candles. So this one we're going with in this simulation right now because it's already happening. The other one with the oil is a pending order. We're waiting for it. So sometimes you don't get the perfect entry if you're trying to go with what's happening right now, and your stop loss might be further away than your take profit, and that's okay. It's okay. Take a trade size that distance stop loss is reasonable risk for you. Okay. Now, if you're a more patient trader and you think there's a larger sell-off coming, by all means, you can put your take profit further away. You can put your take profit down to the next support level down here. Okay, maybe you think it's going to break this little support and come down to the next more major support level, which was a more major resistance level that was there longer. Resistance, 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 dropped, was still resistance here, and then finally broke and became support, support. Okay, so this may be, if you want a larger potential profit compared to risk, now we've got about double the potential profit compared to risk. If that makes you more comfortable, you can do that. And it very well may reach that support level with the fact that the FOMC decision and statement and minutes aren't until tomorrow. And a lot of the fear right now is based on not knowing what they might say. So it has a lot of time still before those announcements to have the potential to drop not just through one support level, but down to the next one. Okay, that's up to you. Your personal preference. Are you a scalper, like to get in and out quick, or are you more patient? You'll wait for a longer movement. And each strategy is okay, and you could actually open 2 trades, right? One to take profit here, one to take profit at the next support level. It's really the possibilities are endless, but in some way you could try to take advantage of a movement if you feel the fundamentals are on your side and the technical analysis is telling you something. In this case, the technical analysis is telling us the support level was broke. That's an indicator of momentum in that direction. Okay, very good. So let's take a look then at gold. I know that's an instrument many like to trade on. Why is gold dropping right now? There's fear on the market. Shouldn't gold go up? Why is gold dropping when there's fear on the market? Can anyone tell me? It has to do directly with the US dollar, by the way. US dollar we saw was strengthening a bit today. A lot of times when there's fear on the markets about something other than inflation, which there was fear about, you know, the housing industry. We read an article. There was fear about retail sales dropping. Okay, those things aren't necessarily inflation related. They could be, but not necessarily. So if there's fear on the market that isn't directly related to inflation, then the gold is an inflationary safe haven, and it's paired against the USD. So if the USD is strengthening without fears of inflation, then that tends to drive gold down with that kind of fear. And that's what we saw today. Saw gold pull down. Now, as we get closer to the FOMC statement, perhaps the momentum flips. If there's the expectation that the FOMC committee is going to maintain the same posture they've had, which is we believe the inflation is transitory and we're going to keep the stimulus going and the bond buying program, and we're going to have more stimulus and print more money. If that's the direction they take tomorrow with their statement, then you could see inflation fears come right back. If they're not talking about cutting back on stimulus but continuing with it, you could see gold go flying right back up as inflation fears hit again. So it all depends on what they say tomorrow. What I do like about this circumstance is gold dropped a lot today, right? If we go to 1 hour candles, it looks more impressive. There's been a lot of dropping on gold in general in the past days. I mean, look at this downtrend, right? Huge downtrend. And then we see on the 4 hour candles a support level right here. Okay, right in this area. We see this was resistance here, became support and up. You see this wick, support and up. You see here it tested it right back up, tested it again, and started to bounce again. So this is a pretty decent support level right here. If you think inflation fears could drive gold back up right now, then why not take a shot, right? So we can say, I'm going to do a market move on gold. I'm going to put my stop loss below what looks like a decent support level. I put it below this wick, below this old support level here. So I'm below this support level, this line I drew, and I'm below the next support level down right here for my stop loss. So I've got my stop loss to a point where even only having to go $25 or no, $15 down in the price of gold, I'm below two nice support levels. So the technical analysis says for me to lose this trade, gold would have to not break just one support level, but it would have to break two support levels at a time where there's inflation fears starting to kick in, heading towards the FOMC statement tomorrow. So until that statement comes out, maybe the odds are on my side that both of these support levels probably shouldn't break, at least until we know what the FOMC committee might say. Now, you could be wrong, right? It could break both these support levels, which is why you put some kind of risk management. You put your stop loss. By the way, if you open this trade on our web trader platform or AvaTrade Go, with gold, you could put AvaProtect. For a small premium, you could protect it against any losses for the next day or 2 days. 1 day would get you past the FOMC statement, pay for 1 day of AvaProtect protection. No matter how far it might go the wrong way, you're protected against all losses during that covered time period. And if it goes the right way, you could make a huge profit. Okay, so you could set this trade up on the web trader as well. I've opened it on the MT4. Where might I put my take profit? Boy, if inflation fears hit, gold could easily come back up to, say, this resistance level here, right around 1900. That could be an easy climb if inflation fears hit. So my potential profit is 3 or 4 times what I'm risking without having to break any major resistance levels. And I'm able to get my stop loss a quarter of the distance, a quarter of the risk compared to my take profit, and still be below 2 pretty nice support levels. So it's a pretty solid stop loss. Would take some pretty big news to break those 2 support levels, or some big fear to break those support levels. And fundamentals seem to be maybe on your side leading into tomorrow. to try and challenge a resistance level up here with a much larger potential profit available. Okay, so we've managed our risk with a few different moves. You know, one on a cryptocurrency, one on a major indice, and one on gold here, going with the fundamental news and with the technical analysis on our side. And also prepared a pending order for the future, because it looks like crude oil might try and challenge a major resistance level soon, and that could be an opportunistic spot to sell from. Okay. Any questions at this point? Any questions, comments? Maybe someone has, we have time to look at one more instrument. Maybe someone has a suggestion. What would you like to look at? How to trade gold is the question. Okay. Well, gold is strongly related to the strength of the US dollar. And more specifically, it's related to fears of inflation that can kick in with regards to the US dollar. And inflation fears tend to cause gold to go up as the US dollar weakens. And the opposite, if expectation is monetary policy, economic policy will strengthen the US dollar, you tend to see a sell-off in gold very strongly. So if you ask for a quick answer on how to trade gold, pay attention to the expectations of inflation or non-inflation with regards to the US dollar. Okay, US 30 was requested. I see that's the first request for an instrument to look at. So let's look at the US 30, which is the Dow Jones 30. Same as NASDAQ, it's downtrending. It's breaking support levels. It just broke a support level itself and then pulled back up some. This is the support level it broke today here, and then broke another support level here. This was a breakthrough candle, and it's plunged down. So it's formed a new support here. Okay, so it's a strong downtrend that has bounced off of this support level here. Okay, there is some support here. If we look at the larger candles, 1 hour, 4 hour, we can say if it breaks this next support level, the next major support level is down here. Okay, so there's the potential. If the fear is great enough about the FOMC statement tomorrow, there's the potential that this support level could break and it could head towards the next support level down here, the next price level where we see the price hit and bounce, hit and bounce. That's support. So it hasn't done that yet, and it's bouncing pretty nicely off this price level here, which is in relation to this wick. So if we go back to the 1 hour candles, we see this was a price point that it bounced from in the past. It hit that price and bounced again. I might be looking for pending order here. If you're looking to trade this, it's not the best location. It's at the bottom of a downtrend that's found support. To buy off that support level might be hard to do because all the news is creating fear right now. So to buy when the fundamentals say that the instrument should drop, it's hard to buy in a downtrend, right? But what you could do is say, if this rises back to this next resistance level, either this one or this one, you could sell, right? And I think if I get rid of this price, I like this resistance level up here. Okay, this was an old support here, support, and then it broke below there, came up, tested this price level, and found it to be resistance and dropped again. So twice it dropped, once here and a second time here from this price level. So if this is able to work its way back up to this resistance level, okay, then that might be a spot to have a pending order to sell. Okay. And it very well might work its way back up to this resistance. And that could be an opportunistic spot to take a sell with your stop loss just above that resistance up here. And so a pending sell limit could be a pending order that you'd place as your entry price somewhere up here with your stop loss just above, take profit back down towards this support. Alan, the US 500 probably sets up very similar. You see it's a downtrend, breaking support levels. It's pulled back up. It sets up almost identical to the NASDAQ. So we've got a market move already on a major US indice that was downtrending, that had just broke a support level. If I was going to place another trade on a major US indice, I would probably diversify, meaning we did a market move already, selling. So if I was looking to sell with the fear, I might say, okay, if I'm going on a second US indice, rather than doing a market move and selling now, I might do a pending order like I suggested on the US 30 or on the US 30, or you could do the same thing here. Here's a resistance level, resistance, 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 broke it here. So if it comes back up to this resistance, you might be looking for a sell limit to sell from up here, similar to what we looked at on the US 30. That's my take on the technicals on that. If you wanted to just sell on it now, the technicals say maybe that's not a great idea. The fundamentals say, yeah, there's fear in the market. Maybe it drops further now. Nicholas, good question. The question is, do you look at the larger candle time frames to see if there's maybe major resistance at that same price level like we did with oil? And the answer is yes, you can do that. Right now, I'm looking at more of a scalping strategy where we're trying to act on the fear that's occurring right now. And we see that just not that many hours ago, this, what should have been a support level, got broken and plunged. So if this gets back up to that level, based on today's fear and today's momentum and today's headline, you might sell from that resistance level. When we were looking at crude oil, we looked at a bigger picture move. So we looked at larger candles. We looked at one-day candles. We had to go to 1 week candles to be sure that, okay, around 75 is where we might want to sell from. Thank you, Alam or Shah. I'm not sure which is your first or last name. Thank you for the compliment. So yes, for sure. What if we look and we find that this price level is also a resistance level on the 1-day candles? Let's look. It isn't. Remember, we already looked and we saw that it broke above that price level this week and then came back below it. It hasn't gone below it yet. Okay, we've got room before it would hit that support on these candles here. So in this case, the larger candles don't tell us much of anything new, and you probably can trade off of this resistance. But on oil, the 1 week candles certainly helped us out. Okay, good question. Mohammed, or Mohammed, as you spelled it in the chat box there. So the question he's asking is about crude oil. If how to trade on oil was the question. And oil is somewhat complex, and actually a bit more complex than something like gold. Gold reacts almost primarily to inflation fears or lack of inflation fears. It's a very inflationary related instrument, easy to get a read on gold. Crude oil reacts to many different things, meaning, Abu, you're mentioning Iranian sanctions, and if they're lifted, how could that affect crude oil? If the sanctions are lifted, that creates more supply globally, right? And if that happens, then that's a reason for oil prices to drop. So there's one aspect of what affects crude oil. right? It is supply factors, whether that's temporary disruption of supply because of war in a certain location, whether it's supply based on sanctions being lifted or put on, whether it's supply based on OPEC agreement to cut production or to limit production, etc. All of these different factors that affect supply can change crude oil price. Then you can look at the other side of it. How's the economy doing? If you see a good jobs report out of the US, that can drive crude oil prices up, right? That can cause oil prices to go up because a good jobs report might mean there's more demand for crude oil when people have more jobs, right? If GDP numbers are higher than expected, that can drive crude oil prices up. So there's a lot of factors, economic and fear and supply related, that can affect crude oil price. How to ask questions? You're doing it now, Herman. You just typed a question. You're saying you cannot find how to ask questions. Right where you type that, that's how you ask questions in the webinar, if that's what you're asking. Okay, so I think we've reached our point here where probably we should back off. We've covered enough information. You've got a number of instruments to look at. Maybe we'll look at corn next time. I saw your question there about corn. Certainly we can look at some soft commodities as well. Maybe bring your own background knowledge about some of those. I'm not a big corn expert on the fundamental side. You have to look at harvest season, time of year, weather patterns when you start talking about some of those soft commodities like corn, okay? And you might be more of an expert on that than me about a specific soft commodity that maybe I don't have much experience with, but certainly the technical side, we can look at any instrument for the technical analysis and could look at corn just as easy as we can look at crude oil for the technicals. With that said, good luck with your trading. I expect a lot of movement and volatility leading up to the FOMC statement tomorrow. There are also major announcements out of Great Britain and other locations, as we looked at, China as well. So I expect huge movements. Get your pending orders in at major price levels like we did with crude oil. Get your market moves going now if you believe in some of these support levels, resistance levels, etc. I believe you have a lot of opportunity to go after large profits while limiting your risk in ways that we kind of demonstrated today. All right, everybody, thank you for joining. Good luck with your trading. Until next time, good luck with the profits and manage those risks, okay? All right, bye for now.